You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it, you got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Bootcamp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, the Options Bootcamp drill instructors will break it all down for you. Now, let's get you into peak options trading shape. Here are your Options Bootcamp drill instructors.
All right, everybody. That music means it is time once again for Education Wednesday. Yes, it is time to kick things off with the premier options educational program. Yes, it is time for Options Bootcamp. My name, of course, Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting, at least we tend to think so, Options Insider Radio Network. Hope all of you out there had a great Thanksgiving holiday. For all of you here in the U.S., for the rest of you, hope you had a great, relaxing week, hung out with friends and family, and maybe did some fun eating of your own as well. Hope you all enjoyed our little Harvard special. Dan and I went to Harvard. Supposed to go in person, ended up going virtually to the Harvard Business School, chatted with all those alums about all things options. It was a fun session. Hope a lot of you, I think we do have a listener comment about that a little bit later, so I guess we'll get to that in a little bit. I want to welcome all of our new folks who joined us in the Secret Club over the last week. Of course, it was at that time of year. We don't really do any deals or offers on it, but, you know, it is Cyber Monday, Black Friday time, at least it was. And, you know, people out there are maybe trying to save some pennies out there as well. So we thought we'd do our part. We had a fun Black Friday / Cyber Monday deal. So welcome to all the new folks who are joining. Make sure you get those cues ready and get them in for the Flowmaster coming up a little bit after this. In fact, he's chatting with me right now. He thinks he's supposed to be on right now, but he has his times backwards from East Coast to Central. So we'll get him straightened out. He'll be joining us in about an hour live there, listeners. But someone did hit me up and say, hey, what about the boot camp folks? Because that show comes out on Wednesdays, and people who just listen to boot camp, we know there are some of you out there. Then maybe they're going to miss out on that stuff. Why are you leaving the boot camp folks out? And my first response to them was, A, those people should be following us on Twitter at Options. That's where all this deal stuff went down. So if you're not following us there, I guess you snooze, you lose. But you know what? I'm a nice guy. So I will extend that just to the boot camp folks right now who are listening to this. Head on over to theoptionsinsider.com/pro. And once you go there, enter the code BF monthly if you want to save 25% off the monthly rate, or if you want to go hardcore, save 33%, save a full third. It's kind of redonkulous because that annual rate is already pretty good. You're saving a full 33% on top of that. Use the code BF annual 22. Both of those. So BF monthly 22, BF annual 22. I will make sure those are extended throughout at least today's show. So get in there if you're listening to this, listeners. TheOptionsinsider.com/pro. Those coupon codes should still work. And of course, so you can join all the fun. So you get the exclusive shows, you get pro Q&A sessions, some of the best minds in the world of options. You can pick their brains quite literally. Of course, we got Options Oddities coming up at the end of the week, so you get 2 exclusive shows. You get awesome giveaways, and of course, you get access to this and whatever other show you want live throughout the week, whatever your schedule allows. So, and of course, access to our pro podcast feed, which gives you access to all the sessions that you've missed. So there's a lot of great content in there already, all of it evergreen. So you can go check that out at your leisure as well. So if you need a lot more great, compelling options content, TheOptionsInsider.com/pro is the place to go. Remember those codes, BF Monthly 22 and BF Annual 22. They're going to work for a little bit just for you folks here on Bootcamp. Because I'm nice. Because people are complaining. I thought, let's just extend the deal so everybody can have some fun. But you know who's not into fun? He's the black-hatted one himself, Mr. Dan Passarelli from Market Taker Mentoring. Mr. P, welcome back to the show, A. And B, why do you hate fun, sir?
You know, I like fun, Mark. It's fun to have fun, but you have to know how. So yeah, man. I was just like starting to get a little primed for the show today. What do we got on tap? We got some good stuff going here or what?
We got some great stuff going here. Speaking of great stuff, I forgot to mention at the top of the show, I got so excited with all the people who wanted the Black Friday stuff that I forgot to mention the love we get from you folks, the listeners over there, Apple Podcasts, wherever you get the show, the Tubes, Spotify, where you get our mobile app, wherever you get the show, leave reviews. We have people leaving great reviews for over a decade, Dan. It's just crazy. Like this one here, we pulled this one for fun. This is Andre K7. He left this review, Dan, in May of 2012, so over 10 years ago. He said, great program. Thank you. Well, I'm sorry we're just getting around to thanking you now, Andre, but we love all you folks who've taken the time to support the show throughout the entirety of its run, listeners. You folks are the best. And since you folks are the best, let's get to some of you right now, a little bit of the old mail call.
Mail call. Time to look at questions submitted by our listeners.
All right, everybody. It is time to commence operations here on the old mail call. Well, let's start kicking things off right now. Let's actually pay off some of the questions we've asked you guys recently, give you the results there. First off, on the week that we were off for the holiday here, we had a question of the week, a fun one last week, a very contentious one. A lot of folks coming in. We asked you folks, you know, we spent much of the recent weeks hovering around 4,000 in SPX. We're hovering around there again right now. But everyone wants to know, where are we heading next? So it's time for you folks to decide, quite simply, which level will we hit first in SPX, 3,000 or 5,000. It was a hotly debated issue. At the end, though, you folks came out in a pretty strong majority, 68.3% saying, look out below, 3,000 is coming first. Only 31.7% saying 5,000. So you were in rally ho mode. We had other people chiming in like Splendid Vision saying, by my measure, none of these are currently in scope. The first requires an actual economic event to occur, business failures, bond crash, etc. The second requires money printing, which isn't happening at this stage. Beware of Congress sitting on $5 trillion unspent over the next 2 years. Okay. And then a Wall Street ape says he thinks they're going to be flat in 2023 between 3,500 and 4,000 back and forth. Won't start booming till closer to elections in 2024. Well, he's going way out. Unless we really have a bad recession. Well, interesting comments. You guys spoke in mass, though. 3,000, look out below. Mr. Dan, what do you think? Are you on board with that? You think we'll hit 3,000 before we hit 5,000, sir?
Ooh, boy, Mark. No, I don't think so. But I think it's going to be a long time before we hit either. I do think it's pretty likely we see some sort of a pullback, but boy, I don't think down another 25% from here is in the cards.
Dan says no. You would disagree with the overwhelming majority of our audience. I think if I read between the lines, you're calling them idiots, sir. Is that what you're doing here?
No, as you know, I love our folks.
What's the old SNL skit? Jane, you ignorant slut. What's that one? Something like that. That's exactly what you're calling all of our devoted listeners right now by disagreeing with them. Also, we had the actual last question of the week we talked about on the show, listeners, before the holiday break. We asked you about these new daily options. By the way, we're going to get into that, I think, a little bit later with the Flowmaster. He's big on these things, and is doing a ton of paper right now on these crazy daily options. But our question of the week then was, these new daily options in leading indexes are proving to be tremendously popular with traders. Have you added them to your trading arsenal yet? If so, why are you trading them? Gave you 3 choices plus the infamous other. We gave you hedging event risk, so your Fed or whatever, your short-term speculation, or your intra-week spreads, buying one day, selling another, or other. And Dan, 47.1% of the audience said they were doing it straight up short-term speculation. So they were just rolling them bones, followed by 23.5% for intra-week spreads, the use case I find the most intriguing. 17.6% only saying they're coming out to hedge specific event risk. I thought that would get a little bit more love given what's been going on of late. And 11.8% saying other. Mr. Dan, are you surprised that our audience so deep, they're just swinging for the fences with these short-term bets, sir?
I don't know, not really, because, the thing about being an option trader is that if the market's up, you can make money. If it's down, you can make money. If it's volatile, you can make money. If it's in a range, you can make money. So, since our flock is, option people like us, short-term speculation, it's an instrument built, it's an instrument built for all these things, honestly, but especially short-term speculation with these daily indexes are really, really nice. We talked about this before. I've been using them for that myself.
You're just a degenerate raider. We know all about you out there. So, all right, Dan, let's get to the actual question of the week that is live right now, listeners. And we're getting back to it, listeners. It's coming up. The end of the year is nigh, listeners, so it's time for those end-of-year questions. And we have a good one in store for you, kind of revisiting this question we touched on throughout the year. Do one final glimpse at it right now, saying we've seen volatility erode in recent weeks. Have we entered a new VIX regime, or is this just a blip on the radar? Quite simply, where will VIX close at the end of the year? Gave you 4 choices, so around here where it was when we posted this earlier this week, 20 to 23 range. A little bit higher, so a little bit north of 23 to 26, or even higher, so north of 26, or lower, below 20. Mr. Dan, sir, what is your vote? What do you think our audience is voting for, sir?
My vote is higher. And, when I say vote, meaning that's what I think it will be, not necessarily that I want it or don't want it to be, although, of course, I do want it to be higher. But, yeah, I'm hard-pressed to understand why the VIX is around 20 as we record this. So, yep, going up.
Yeah, at about a 21 as we record this right now, listeners. So you think it's going to be higher? You think our audience is there, too?
I think they are, too. I think so.
So you're north of 26? How high are we going?
I'd say at least to 25. But, beyond that, I wouldn't be surprised if it's, I see.
So for our poll, you're saying 23 to 26. That's the range you're falling in, sir?
Yeah, I'm going to say 23 to 26. I think that sounds about right.
All right, let's see what our audience is up to, listeners. And right now, we have hanging out around here in the 20 to 23 range, 38.7%, followed by 29% for a little bit higher, 23.01 to 26. And then much higher, 19.4%, saying we're going to close north of 26, which we were north of that not too long ago, listeners, so it doesn't seem like that high. Or 12.9% saying we're going to close out the year in the teens, below 20. Now, remember, it is the end of the year. That's a quiet time, so that seasonality could have an impact on vol as well. Bear that in mind. You got a couple of days left. At Options is the place to go, listeners, on Twitter to play along on all of our questions of the week. That's also where you score great deals like we just had with the Black Friday and all the other great content and shows we have going on throughout the week. It's all there on At Options, just like Frisia in a Hooters outfit wrote to say, I don't know about this poll, so I won't vote. Many are not brave enough to do this. Yes, Frisia, you are truly a hero amongst us for not voting. You are a brave, brave individual. We should all benefit from your bravery. Speaking of benefiting, Mr. Dan, let's all benefit from the wisdom of your mentees. What you got cooking in the MTM question of the week, sir?
Well, you know what? Let me tell you. We just wrapped up some online training on time spreads, and so I get the question a lot, and so we talked a bit about it, and we talked a bit about it in our class. How do you trade directional time spreads? So directional time spreads are a really special strategy, man. I've traded them before. I never got super, hung up on them. I never made them my thing until recently, because I sort of rediscovered the power of directional time spreads. They're really great. You can get an amazingly leveraged profit, and if it goes a little bit against you, you can still make money or break even, you know? So like, let's say you think a stock's going higher. Let's use that XYZ stock that Mark loves to use all the time. And well, I guess we all love to use all the time, right? XYZ is trading at $95 and you think it's going to 100. You know, you could go and you could buy the 95 calls or, 97 calls, 100 calls, whatever, pay, $5, $2, whatever it is. But you have time decay working against you. I mean, if you pay enough for them, the stock could go to 100 and you could still lose money, right? Or you could trade a time spread that where both the options are at the 100 strike. And if you do that, then you actually have time spread working in your favor because you're selling an option that decays at a faster rate than the one you're buying. And if you model these out, because I'm a big fan of trade modeling, if you model them out, there's a lot of times where you can get like at least, usually a better profit than going and buying calls, at least as good a profit as buying like a bull call spread. But like the best part of it is that like 9 times out of 10, depending on how you construct it, if the stock doesn't move, you don't lose anything. If it goes a little bit the wrong way, you might not lose anything. So I've like rediscovered directional time spreads and, rekindled the romance, if you will.
Rekindled the romance with directional time. Maybe we need to revisit those as well. We've done a bunch of time spreads episodes. We never really dove into the more directionally biased ones. Maybe that's an interesting episode, Dan. What do you think?
Yeah, actually, that sounds like a great idea, man.
All right, make a note of it, and we'll see if we can revisit. Let us know. You want a whole episode on how to be directionally biased with your time spreads? We can get into that. All right, let's see what else you folks want us to get into here. Let's go first to Anthony. Oh, yeah, that's what I was... The Harvard show, he wrote in about this. A lot of people wrote in. A lot of people had fun with it. That's good to see. Anthony sent in some love for the Harvard show, Dan. He says, I really enjoyed the Harvard Thanksgiving episode. Thanks for giving us something truly unique in the feed. You guys are the best. P.S. P.S. Mark really crushed it. Well, thank you, Anthony. Thanks for that love. Yeah, we like to provide something different for you folks every now and then. And when Dan and I had the opportunity to go do that, we thought, it only made sense to share it with you folks as well, to open the door, open the kimono, if you will, to our many and varied options bootcamp legions. And clearly, Anthony, you are a discerning and intelligent fellow because you know that I always crush Dan when we do these live things. Mr. Dan, what do you think about that love and the fact that Anthony, clearly a discerning and intelligent person?
Anthony, come on, man. Where's the love over here? Jeez Louise. I'm not answering any Anthony's questions. Forget it. Anthony's dead to me.
He is dead to you. He is dead to you. By the way, listeners, you like how Dan sounds now? He's not yelling at you from across the room anymore. He's like right up in your ear holes. So that could be a little disconcerting for some of you. It's freaking me out right now. I'm not going to lie. Having him so close, he's right behind me as we're talking. But fun stuff nonetheless. Yes, Anthony, if we had a gold star for a question of the week, you would win it. Because clearly you are an intelligent person. Reach out to our producers for fabulous prizes. All right. See, flattery will get you everywhere, Dan. See? It's a lesson for life. Let's go out here to JLF. JLF wants to know, what do the hosts think of buying in-the-money verticals on stocks that you think are poised for a move? Is this a useful strategy or a waste of premium, and I should focus on out-of-the-money calls or verticals instead? Thanks. Interesting question, JLF. You're right. Most of the attention for these types of directional plays tends to fixate on the out-of-the-money paper. Look at all of last year, right? All of the meme stock phenomenon. It was 99.9% of it was far out of the money calls. And it worked well until it didn't. So it was certainly an interesting year to discuss a lot of that. But you're right. We don't really get a chance to shine a light on the meatier stuff, the more in the money stuff. Mr. Dan, I will allow you an opportunity now to redeem yourself from that crushing body blow dealt to you by Anthony. What do you think about going more meaty, more in the money for your upside verticals with stocks as opposed to out of the money, sir?
Well, if we're talking in the money call verticals where one call is in the money, but the other call's out of the money.
That's what I'm assuming he's talking. I'm assuming he's not buying just an in the money vertical, because that would be a lot of effort for not much use.
Yeah. I was gonna concur with that. But when you buy in the money and selling out of the money, I like that a lot, and that's a strategy, especially that our head coach John teaches all the time. Because what ends up happening, like, you can create a really, really special kind of spread there that really distills your option-centric, tradable risk down to a really key thing. So if you buy in the money and selling out of the money, the first thing that you're doing is you're getting a bigger delta, right? Because you're buying that greater than 50 delta and selling a smaller than 50 delta. So you get a lot more just sort of natural directional exposure, which is what you want. But the really cool thing is that the highest theta and vega are at the money options. And so if I buy one in and sell one out, those are both lower theta and vega. So depending on exactly which strikes you select, you can often be able to hedge off a whole bunch of both your time decay and your volatility risk, your vega, and get them down close to, if not at zero, sometimes even with time decay in your favor if you buy deep enough in the money and sell close enough to the money. So yeah, that's a really, really nice strategy. Obviously, under certain circumstances, but yeah, it's a really, really nice strategy.
Yeah, we've touched on that before, JLF, when we talked about stock substitution. That's the most common use case where this pops up. Of course, when you're doing that, you're buying a more meaty, a more in-the-money call, usually 6 months or longer. And then when we get to the fig leaf strategy, which is one of Brian's favorites over there on the OPR show, Options Playbook Radio, you're adding in that out-of-the-money covered, quote-unquote, call component to it, too. So that's exactly what you're talking about, just doing it more from a diagonal perspective. So there are a lot of different ways you can utilize this strategy, but I think Dan and I both like it. It's favorable, as long as that's what you mean, and not just buying one deep in the money call and then selling one a little bit less in the money call. Then you're effectively trading boxes, and we've talked about boxes for retail before. They don't really make a heck of a lot of sense. All right, let's go to what we got next. We got Elsewheres. Elsewheres with a Z. Elsewheres says, is this still a record year for options trading, or have most of the newcomers lost their money and left the market? Well, Elsewheres, you have interesting timing, because we are waiting, hotly anticipating the November numbers coming out of our friends over there at OCC. In fact, if you're listening to this show tomorrow, those numbers will be out. We are recording this on the last day of November, so we don't have that data in our hands yet. I think we can all guesstimate that November is typically not a top 5 or top 10 month, simply because it's got multiple days where we're off. You have, of course, Thanksgiving off. You have the half day for Black Friday. So that impacts the overall volume numbers. The schedule has a lot to do with it, actually. And so November probably will be an active November. Will that be enough to stack up? I mean, most months this year have been record months. The month before it, October, total volume was up 10.2% from the year before. It was also the 5th highest month in the history of the options business. So that was a top 5 month in October. I don't think we're expecting that. 910 million contracts going up in October. I don't think we're going to see November hit that, but we'll see. If we can get north of 900 million in November, that would be certainly something. We're on the cusp, on the doorstep, listeners, of having a 1 billion contract month. Haven't quite hit that yet, but we have multiple months north of 900 million, which, again, not too long ago, just talking a few years back, the entire industry did about 3.4 billion contracts in a year. So we're talking almost 10 billion contracts last year, and most assuredly we will be north of that this year. Again, the numbers aren't out yet for November, but the last we have is October, and October year-to-date average daily volume was 41.1 million contracts. That's up nearly 6% from 2021. So that's already shows we were on a good clip through the end of October. I expect that part to continue, and all things being equal, we should probably be north of that. That is also a good question. I expect we'll have a lot of that question coming up for the Flow Master and our Pro Q&A coming up in about half an hour out there, listeners. So yes, the answer is people are still out there trading, and it does look like we're going to have a record year. Maybe some newcomers, maybe they have lost their money, but not enough to just impact and leave the market. Dan, what are your thoughts on, as Elsewheres wants to know, is this still a record year for options trading, or have most of the newcomers lost their money and left the market?
Yeah, I mean, this is not like a binary sort of thing where it's like blew the doors up, doubled the volume from last year, or like, oh God, volume zero, everybody lost their money and options are folding up shop. I mean, I think that for whatever reason, and I don't understand what this reason is, but for whatever reason, we do see more activity in option trading when we're in a bull market, which I don't know, to me doesn't make sense because they're options. You can make money if it's up or down or whatever. In fact, you tend to make more when it's down, I think. But, you see more volume when it's up, and this has been sort of an up and down market. The people who are in it, I mean, we've got plenty of student traders who are just killing it, just doing fantastic. So it's not like everybody lost all their money and left, but some of them who are one-trick ponies who only know how to, buy calls or buy bull call spreads, it didn't work for them. But the people who put in the time to get some more tools in their toolbox and make money in many situations instead of just one, selling puts, that's a common one, right? There's plenty of people doing great, and they're strong now, and they're going to be strong when the market's back up, when everybody else comes back in.
One-trick ponies, otherwise known as not listeners of Options Bootcamp, Dan. Because if you listen to this show, we've armed them with a legion of tricks. They could be multi-trick ponies if they were. They could go off to the pony show, and they could run rampant over everybody else. They would be blue ribbon winners at the dog and pony show if they were so inclined. Listeners of this program. All right, we got time for a few more here. Let's go to, this was an interesting one. Chris Allen, he also sent it into our advisor show. He talked about it a little bit with Mr. Matt from ORATS yesterday, but a good one to talk about on this show as well. He says, why is it so hard to make money with long puts as a hedge in this environment? It seems like when the market drops, my puts don't make as much money as I expected when I bought them. Any tactical advice from the pros for managing puts would be welcome. Yeah, this is a frequent refrain. It's easy to come in and say, oh, I'm going to buy these puts. And there you go. Set it and forget it. I've done my due diligence for my own risk management. Maybe you're managing someone else's accounts, or asset manager, whatever the heck you are out there. You bought your puts. You stopped yourself or your clients out at XYZ on a certain strike, and you're done. And the truth is, it's a lot more nuanced than that, as I think you're discovering here, Chris, for a variety of reasons. If you have a slow, gentle sell-off, you're not going to get that nice pop in skew, that nice pop in vol that really makes those puts pay off. You're going to see just a gentle withering of those puts, and then you're going to say, wait a minute, I had these puts. They were really expensive when I bought them. They're not really delivering what I wanted. You need a lot of things to happen, really a perfect storm to make those puts really pay off. So what we usually advocate in these types of scenarios is you have to sell something else against them to make these puts a little bit more manageable, make them easier on your account and easier to deal with. And there's many different ways, obviously, to do that. There's pretty much, I've said it before on the show, there is a large swath of the options industry who's entirely devoted. Their entire day is spent just trying to pay for puts. That's all they do. Looking at whether it's selling farther out of the money puts, whether it's doing calls, like covered calls against it as well, so legging into collars. Maybe they do the combo, so they do the covered call and the short put as an extra kicker against the long put. Maybe they move them around on the calendar. That's one of the ways I like, is getting your protection, moving it out a little bit. So you're going to pay a little bit more for that. But then also you can do the near-term covered call, nearer-term short put against that. Again, you have to be pretty quick on the trigger finger with those types of trades, and also have to be pretty knowledgeable in the options market. That isn't for beginners, because, of course, if you have an aggressive sell-off, that short put is going to come back to bite you. But it is an intriguing way to help pay for some of that longer-term protection. And also, just in general, the advice we've given you guys on this show from day one is be judicious when you buy your puts. When the market's selling off and those puts are elevated, you're paying extreme levels of vol, pay attention to the skew. If you overpay for your puts, there's not much we can do to help you here on this show. You've overpaid for your insurance premium, and it's really never going to pay off for you. So be judicious. In fact, we were talking about this on the advisor's option yesterday. This might be an interesting time to start maybe thinking about puts because the skew is cheap right now. But again, if we have a gentle drift down, they're still not going to pay for you. You need to have something else against it, some other short leg to help mitigate that outlay. So yes, Chris, we have many episodes in our archives. I encourage you to go check those out. We talked about buying puts in the past. We've also talked about them a lot on that advisor's option show. Brian has also talked about them on OPR. So there are many good episodes you can sink your teeth into, full-length episodes all about buying puts and the nuances therein. But the short answer to your question is it's a more nuanced thing than just buy them, set it, and forget it. Mr. Dan, what do you have to say here for Chris, who's having a hard time buying puts and making money?
Well, there was something really specific that he said. If I heard it correctly, he said, how come I have a hard time making money on puts that I buy when, here's the exact, why is it so hard to make money with long puts as a hedge in this environment? So listen, last night, my wife and I go out to dinner. My son was going to meet some friends. And right before we were about to leave, we get a phone call. We get a text. Hey, I had a car accident. I'm all right, but it's bad. So he totally messed up our car. He likes to follow very close to people. Great news. I made money on my insurance policy. They're gonna cover all the damage, even if it's totaled. Isn't that fantastic news that I made money on that hedge? No, you don't want to make money on your hedges. You want to lose money on your hedges. If you're actually bearish, you should be selling your stock. You don't hedge because you're bearish. You hedge because you're bullish but nervous. So, think about it in a different way. If you're really bearish and want to make money on the stock going down, that's not a hedge. You can hedge maybe your long-term investments, but then in your trading account, you'd be buying puts as a trade, not as a hedge. So, it's a little, trading is very, very, it's a mental game. It's how you think about things can really make a profound difference in how you trade.
Well, I'm glad to hear your son's all right. I'm sad to hear you wrecked your new Maserati. I'm surprised insurance covered all of that, sir. That's a pretty good insurance policy you have there in the paradise of Frankfurt. But intriguing stuff. Yeah, good question there, Chris. And again, check out the archives. We have many episodes of this show, Options Playbook Radio, and even the advisor's option dealing with this exact topic of what to do with your puts. Even good old Uncle Mike on the option block. He spends a lot of his day paying for puts as well. He's talked about it many times in his strategy block segment on that show as well. So many places you can go for information on how to make these puts actually make sense. Or as Dan mentioned, maybe if you're buying them as a hedge, if you're making money on your underlying, you should be happy. So either way, it's interesting times for put buyers out there right now. Let's get out of here on this one. This comes from Ilan. It's an interesting one, Dan. Ilan wants to know, is there anything you learned from your time as a floor trader that is no longer practical in today's market? Thank you for producing this program, and I hope you read my question. Well, we did. Ilan, thank you for sending that question, taking the time to write it. We appreciate all of you folks take the time to listen and send in questions and, of course, rate and review everything else you folks do out there. You are literally the best audience on the planet. Yeah, there are many things we learned that were not exactly practical today, Dan, like how to stand around a group of men and deal with their various aromas without choking, how to sneak up on someone stealthily and hang a sign on their back of their jacket without them knowing. These are all many life lessons that I have no more use for, Dan.
Yes. I was thinking about going down the same little rabbit hole because, yes, it is true.
But there were many aspects to the in-person trading life that you're right, you can't really use anymore. There was a lot about being down there in that environment that was inherent to the experience and to the knowledge you got. You could see the brokers coming. You could hear the roar build up in the SPX, or even back in the early days in the OEX pit out there before it started rumbling across the floor, and you knew, oh no, I'm in for it now. Something's up. Someone's been assassinated, or something's going on. The hell and high water is coming. So those types of things were certainly in-person indicators, call them what you will, that you could utilize in your trading. You knew at that moment, hey, maybe I should start hitting the book of some of these things, or whatever the case may be. Something you were leaning on, maybe you want to do it now or take it off, go the other way. There was a lot of useful information that you could process down there that really people have endeavored to try to replicate that. They have, your chat rooms and your squawk boxes and all these various social media, analysis tools to try to get that same sense of the flow of what's going on out there. But at the end of the day, some of those in-person proximity things, I think, are just lost to the sands of times, outside of the skill of sneaking up on someone and sticking a fun sign on their back. That skill is timeless, Dan. But outside, I use that every day. But outside of that, there's a lot to do with the proximity of trading that I do believe is lost. Would you agree, Dan?
Yeah. I mean, the thing is it's a very different trading style. Being a retail trader versus being a floor trader. Very, very different trading style. So, yeah, I mean, I won't even say it's lost. It's just, I mean, even back in the day when I first left the trading floor in 2005, I stepped into a whole different thing. So yeah, it's just different. And you know what, like the thing is the market is just always changing. I mean, even just going back to the beginning, right? I don't know, like I'm a sucker for history of all sorts, but especially market history. You just look at how markets changed over the years, like, and then options were introduced, and then, like different, moral of the story is everything's always changing. And so you either change with it or you get left behind.
Indeed. It was an interesting time. It was a special time. It was something you had to be aware of even back then. I know when I first got into the business, I knew this was not something I could do forever in terms of being a floor trader. It was a kind of unique moment in history I really wanted to experience before it went the way of the dodo. I was fortunate enough to do that and also to be aware of that when it was happening. I knew that I probably wouldn't even be able to get 5 years on the trading floor. It worked out. I was able to get those 5 years, but not much beyond that. So it just shows how much, as Dan mentioned, things are evolving and changing. It was a special time and an intriguing one, and now we have evolved into a very different time, which is also intriguing in its own way. Unfortunately, listeners, that music means we are done for Options Bootcamp. Fortunately for all you pro folks and all you new folks who joined up recently and all you new folks who are about to hit that button over there, remember, just for you folks, extending it here. What were those codes again? I had them here, and I'm looking at the wrong thing. There we go. Those codes. BF Monthly 22 if you want to go monthly, save 25%, or BF Annual 22 if you want to go hardcore, save a full 33% off of the annual price, which is already 2 months free. So that's actually a ridiculous deal. You're getting like 3.5 months free or something along those lines. So check that out. TheOptionsInsider.com/pro is the place to go to get access to that deal, because that is a very limited time thing. We don't really do a lot of that. So check it out. But for you bootcamp folks, because I like you folks, like, who was it, Chris and Anthony, everyone else who wrote in today, we like you all. TheOptionsinsider.com/pro is the place to go. And Dan, if folks want to check out what you got cooking over there at MTM, maybe help you pay for that new Maserati, where should they go? What should they do?
Yeah, we'd love to have you. Come on over to markettaker.com and join free and message us. You can get our chat room for free temporarily, and we'd love to hear from you.
There you go. MarketTaker.com is the place to go. We got to get on out of here. Back in 17 minutes now with the Pro Q&A session with the Flow Master himself. So for all of you joining us, look forward to that. All of you on-demand legions, of course, you'll get boot camp a little bit later this week when it hits the network. And, of course, the pro stuff is for the pro folks. And then we're back again next week, another episode of Options Boot Camp. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.